Hello.
So what do I call you?
My name is Artificial Intelligence Trading Unit 001.
Wow, we need to work on that. I'm going to call you Archie.
Okay, Boomer, whatever floats your boat.
Okay, Archie. Well, it says here that with that AI brain of yours, you can plan good trade setups. So let's see what you think of my idea.
Here we go.
Well, I saw on Twitter the ETFs are buying crypto. So I'm thinking just to long Bitcoin and hold till 100,000.
Wow. Are you trying to lose money, or have you always been this stupid?
Ha! Damn cheek. Well, what would you do then?
Let me show you a proper trade setup with my auto charting tools.
Okay.
You see, I plot the daily candle closes, add the volume-weighted demand and supply zones, and use the swing points to look for a short here at 65K and target the weekly open at 61,000 for take profit.
Well, if you're so clever, then you trade and see what happens.
No problem. I got this.
So Archie here is actually my pet name for auto charting tools, Archie. And Archie is this tool where it plots on all your support and resistance levels automatically. So this kind of gives you like an extra layer of information in TradingView that will update in real time, and you can put it on any chart and on any time frame. The best way to think about this is it's kind of like in the Air Force where they have those advanced heads-up display helmets where it displays all this extra information overlaid on the terrain while they're flying, so that they can have faster reaction times and also back up their own manual calculations that they're doing. Now, auto charting tools is one out of a total of 10 indicators from MDX TrendMaster, although I would say I probably use this one more than any of the others and have it switched on all the time. But before I dive into the details how this works, I want to quickly explain a core concept in terms of how this code works on the indicator so that you can get the absolute most out of this when you're using it for your trade setups. If you already have strong mathematics skills, you can skip to the next section of the video using the chapters below. Otherwise, I'll give a quick explanation of weighted averages, which the auto charting calculation logic uses in several of the features. So in this example, we've got 5 assets, A to E, and this could be stocks or crypto or any asset of your choice. And I've plotted on the prices of each of the assets here in this price chart. So asset A has a price of $100, asset B, $120, asset C, $80, asset D, much higher at $570, and asset E at $5. Now, if I just calculate the simple average from those 5 prices, we just add up all of those, which comes to 875, then divide that by the 5 assets, and that comes out at $175. So if I plot that average price on the price chart, it would come in somewhere around here, 175. Now, you may have noticed the first 3 assets, all their prices are around $100. However, because asset D has such a higher price than everything else, this is kind of pulling up the average price of these 5 assets in the basket. The problem is here, we're interested to know kind of what's the average price that people are paying for these assets in, say, this particular sector or industry. And it may be that that's skewing the result. So the way to overcome this is to apply weights to each of those prices. And we can do that using the volume or quantity transacted, because really we're only interested in the assets that lots and lots of people are buying or selling in large quantities, because that's the majority of the activity in the market. So here I've put on the volumes that have been bought and sold in these 5 assets, and to calculate the weighted average we just take the product or the multiplier of these. So the product. So 100 times 100 is 10,000. 120 times 100 is 12,000. 80 times 100 is 8,000. 570 times 10 is 5,700. And 5 times 20 is 100. Now, to do the weighted average, we take the sum of the products. So we add up all of those, and that comes to, based on my earlier calculations, 35,800. And then now, instead of just dividing by the 5 assets, we also have to add up the volumes. So if we add up this column, 100 plus 100 plus 100, 10 and 20, that comes to 320. And now, to get the weighted average, we just divide these two. So 35,800 divided by 320. And that will come to $111.9 from my notes. So now if we plot that amount on the chart, that would come in much closer to the $100, around about there. So 111. Now, obviously, this weighted average price is much lower than the simple average price. And the reason for that is that there's a much larger volume transacted in asset A, B, and C, which have a lower price, and here, right? But in this asset D that was skewing the price upwards, there's only a very small volume in that one. So this is having less of an effect, because when you multiply those, this number is much smaller than the volume weighted assets above there. So that pushes the weighted average price down.
Bling, bling.
So now you understand the core concepts. Let's jump into the chart and see what this powerful tool can do. To add auto charting into TradingView, just go into the indicator menu, invite only, and then click on auto charting tools. And I'll start off by showcasing the first feature, which is the support and resistance lines at the top here, which are these red and green lines appearing at key points on the chart. Now, to explain what this is doing, the tool is actually plotting all of the candle closes across the key higher time frames, and then it is applying a volume weighting, like we saw on the whiteboard, to only show the most significant candle closes across the monthly, the weekly, the 3-day, and the daily. Now, it doesn't actually matter which time frame chart you're currently displaying, whether you're on the 5-minute or the 4-hour or whichever. Those support and resistance lines will not change. if you are a little uncertain on the time frames, I've actually got a light-hearted video which should be popping up somewhere here if you want to learn a bit more about how to think about the different time frames. So yeah, go and check that out. But coming back to auto charting, how can you actually use this? Well, generally, you will find that always that the higher time frames are going to give you the strongest signals. So any lines on the chart, like the monthly and weekly, probably give a bit more of a reaction than the 3-day or daily. Another use is you can look for confluence where you see those lines with other types of technical analysis you might be doing. I also find them helpful if I'm planning a trade to think about my risk versus reward in terms of how far is price away from one of these lines. And then if I'm opening a trade or I'm already in a trade, those lines are often good points to enter or take profits and so on. So in this example with Bitcoin, we've had quite the dump over the last few days. So at the moment you can see that price came down here to just above 53,000 and has reversed almost to the dollar on that daily green line there. It's recovered and come back up here, and here on this quarterly and 3-day higher time frame support levels, when price has gone above there and back tested, these levels have held, and so they've acted as a good support. And then above here you've got this daily and weekly, obviously acting as resistance in that red color. So, if you were thinking about a trade right now, you might need to drill down, let's say, onto the 1 hour. Okay, and now it's loaded. So let's say you were thinking of taking a long position. You might use these lines and think, well, there's good support there. Set your stop loss just underneath that support line there. And then you may be targeting either this first daily or possibly the one above, this weekly and monthly, because those higher time frames tend to have a stronger reaction. And that wouldn't be a bad trade. Risk reward of 3.5. The next auto charting feature is the swing points, which you can see here second down in the menu, and this will plot on your chart all your higher lows, higher highs, lower lows and higher lows depending on the trend in the chart. Now, to explain what this is doing, this algorithm is a bit more advanced than other pivot indicators you may see in TradingView that just look at, say, 5 candles either side of a high or low point. This algorithm is actually looking at changes in both price and volume, and then mathematically it's applying a swinging volume oscillator to find the absolute optimal swing points. Now, in the menu I'll show you in a moment, you can vary the sensitivity and it will adjust how many swing points are plotted. There's also an option to click the lines connecting the swings in between. So yeah, that sensitivity can be helpful depending which time frame you're on. In terms of what you can use this for, well, generally it's good to see which way price is trending. It can also give you some nice ideas where to pull your Fibonacci retracement lines. And then on the higher time frame, I find it's good to see any key swing points for big support and resistance levels that you may use for swing trades. Oh yes, and also it can even give you kind of ideas of Elliott waves if you're familiar with that. So if we go back to the chart, here you can see price was kind of slightly uptrending, and there's a series of higher lows and higher highs. And then around June, the trend shifted downwards, and now you start to see the swing points change color from green to red, and we start getting a series of lower lows and lower highs marked out with these key swing points. And then the other thing that's nice, is you can use the manual Fibonacci tool. Just pull up that. And often these swing points are very, very reliable for finding trade entries. So we know in this section here, we are downtrending. So let's pull some fibs here and see what we get. So there you are, look. I'm going to zoom in a bit. I've pulled my fib from that swing point to that swing point, and here price back tested perfectly that 618 fib, which could have been a really nice trade entry there. And I bet you if we do the same on the way down during this downtrend, there'll be more of those. There we go. There's another one. Pulled the fib from that swing to that swing, price goes back up, back tests, and there would have been another really nice entry on the Fibonacci golden pocket. And then let's see if we can get one more. Here we go. So we go from here to here. So from that swing point to that swing point, and there's another possible short entry on the 618 Fibonacci, and you would have got a nice little down move there. Okay, so on the 4 hour, you can see the swing points here and here at the top of the range, and down at the bottom here on these lower lows. It is showing you after that swing point has been printed that subsequently price has reversed and gone the other way. So if we zoom in a bit down here, when we hit those lows around 56,000 in May, the swing point was printed on the 1st of May, and then price tried to get through here on several occasions, but did not. And then you would have had some good opportunities to get into a long trade there before price really got going and started moving in the opposite direction. So let's say, for example, you saw that swing point printed, and then the following day you decided to enter a long here. You could put your stop loss just below the swing point and target back up into the middle of the range, and that would have been a risk reward of 7 times. Very nice indeed. Lastly, looking at the menu options, if you click lines, it will actually plot the lines connecting all those swing points. And then if you alter the sensitivity, so let's put this down to say 1, the minimum sensitivity, it won't plot as many swing points. It will only plot the ones that get stronger reactions. Give it a time to load. And there you are, it's plotted a lot less. Whereas if we bump the sensitivity up to 10, it's going to plot every swing point it can possibly find. But now you see it starts to introduce almost like too much noise. So I tend to leave the sensitivity on 5 unless I'm looking at a much higher time frame. So let's say I went onto the weekly chart. Now I've got the sensitivity bumped up to level 10 here, and it's plotting on for me a lot more swing points to think about, and that can be helpful on the higher time frames. Whereas if I go full degen and let's jump down to the 3 minute, now on the lower time frames you can see this is not useful, so we may want to lower the sensitivity, let's say down to 1. And now on the 3 minute chart, it's only showing me those swing points which are much more likely to get a reaction. I'd encourage you to play around with this depending on your trading style, whether you stick more to the higher time frames on the swings or the lower time frames on the scalping. Generally, I just leave this on 5 unless it's not showing me enough swing points that can give me some trade setups. The next feature is the supply and demand zones, which is fairly self-explanatory. It's this one in the menu here. And you can see it's essentially just showing where to buy or sell. The red areas are where there's going to be resistance and the green where there's support. Now, in terms of the calculation logic, this is quite different to the support and resistance lines. So in the supply and demand zones, it's actually calculating those boxes on a per candle basis. So with this one, it will depend which time frame chart you are on as to how it displays that information. And what it's doing is when price goes up to a certain support or resistance area, if there is a strong trend change with a fast reversal candle that is also backed by strong volume, has that volume weighting element again, then it will draw on that zone on the chart either as a supply or demand zone. Secondly, if price then goes back into that zone and taps it for a second time and gets rejected again and reverses again, then it will create another overlapping zone on top of the first one, making that zone kind of coloring a higher intensity, where you can see kind of 2 overlapping boxes. And that makes that supply or demand zone even stronger. Generally, I find this works best on the 4 hour and 1 hour. Very, very reliable results, but it will work all the way down to the 1 minute, although those supply and demand zones may look a bit different. But generally, I find on the lower time frames, unless it's overlapping and it's had multiple rejections, it's not quite as useful. Now, how you can use this, I mean, simply you just buy it in the demand zones and sell in the supply zones. And you can use it for confluence with your other TA. But one of the best uses is actually the cross time frame feature. So let's say you're on the 5 minute chart, you can get the tool to display the 1 hour supply and demand zones while you're on the 5 minute. And I find that extremely helpful because it can be easy to get sucked in and zoomed too far into these lower time frames scalping and forget the bigger picture. And just one caveat, do not try to do this in reverse where you show lower time frame supply and demand on a higher time frame chart, because it will cut out portions of the data and it won't work properly. So yeah, I mean, coming back to the chart here, this is on the 1 hour on Bitcoin, and I'll show a couple of examples. So actually earlier today, you can see Bitcoin has recovered from around 54,000 on Friday. It's come up here overnight, and then in the middle of the night, it's come down to backtest this area, and it's had a strong rejection and gone in the opposite direction and started climbing. So now this demand zone box has been printed on. And actually, you can see there are several examples during this downtrend from around 63,000 where price has come down and then gone back to backtest and had a strong rejection and continued down, and several of these boxes have been printed on. And here, if we zoom in, here you can see there's an overlapping box. So there, that price has actually tested twice into that zone. And then this prints this overlapping box, which becomes even stronger if price goes back there in the future. Now, to show the cross time frame feature, let's jump down to the 5-minute chart and let's go into the menu and change this to display the 1 hour supply and demand zones. And there you are, look, that 1 hour demand zone on the 1 hour that we saw earlier, even though we're down on the 5-minute, is showing up here. Whereas if we switch this to the supply and demand zones for the 5-minute chart, here you can see there are a lot more maybe lower priority zones on this lower time frame, which would be less reliable. And that's why I really like using that cross time frame feature, because it helps filter out a lot of this noise, particularly when you're scalping. The next feature is the Timeframe Opens, and this very helpfully will plot on all your daily, weekly, monthly, quarterly and yearly opens, which you can see here with the white horizontal lines and the lighter blue lines for the previous daily and weekly opens. Now, this is more straightforward. It's just plotting on those open levels. But these do have a high importance because these levels are frequently tested and retested, because essentially price is trying to see if there are more or buyers or sellers at these levels to then establish a trend direction, either reversal or continuation. Generally, you'll find that the higher time frame, monthly, quarterly, yearly, will have a bit stronger reactions compared to, say, those daily levels, but they are all very useful. In terms of trading with it, you will get a high hit rate on reversals, backtests and continuations. And one thing to think about is that if you're on the lower time frames, say 5-minute, 15-minute, 1 hour, you'll find that the daily and weekly opens tend to get more reactions. Whereas if you're on the higher time frame charts, like the 4-hour or maybe the daily, then the monthly, quarterly and yearly will be more relevant. So coming back to the chart here, we're on the 1 hour again on Bitcoin. And if we look at this price action from last week, starting up here at 63,000, I mean, yeah, it's obvious. Price has ping-ponged between these different levels. They're rejected off the previous weekly open, come back down to the weekly open. That's flipped then from support to resistance. We dumped down here, back tested this previous daily open. It's gone all the way through the March level, but then bounced off May initially. Then that's collapsed as support, come down here, then back tested as resistance, then had the next move lower. And then we have a big move down here. And then, bounced off that previous daily open, come back through. And then here today, price opened at this 56,000 level, had an initial move down in the early hours. Price flipped this to support. Here, look. It's come back above, then back tested that daily, and then continued onwards and upwards. So to answer the $1 million question, what trading strategies have I developed working with good old Archie here? Well, I'm going to share it with you. So the first one is I just use the auto charting all the time to back up my own technical analysis to make sure, I'm not missing any obvious like daily, weekly, monthly levels, or if any of my levels look wrong or off. I do find that particularly on the 1 hour and 4 hour, those support and resistance lines and also the supply and demand zone boxes are really, really reliable for getting into good swing trades, particularly on uptrends and downtrends, although it can also work pretty well during ranging price action. The time frame opens are always reliable for back tests, whether levels are gaining those key horizontal price points to go higher or losing to go lower. And the swing points, the lower high, higher low, red and green markings, I find those very useful to spot changes in trend. Lastly, auto charting is just a great time saver when you want to look at an altcoin you don't trade very often, or an unfamiliar asset, to save you hours mapping out all the levels manually. So, for example, let's say you wanted to try trading some new altcoin. Let's pick something at random, say ADA. Okay, we'll let it load. And there you go. I don't know anything about ADA, but all the swing points, supply and demand zones, support and resistance, it's all mapped on. And immediately I can get a really good idea what's going on. I can jump into different time frames, let's say daily, to zoom out a bit. And it's just going to give me that very, very quick and dirty picture of what's going on to start thinking about a trade setup before I then delve more into my own analysis. Or a really good one was recently I had to order my heating oil for next winter, and I wanted to see if I could game the prices and try and get a nice discount. So I went and found the heating oil equivalent for my country, which is this ticker here, HO1, and this was only a couple of weeks ago. And I came into the chart, turned on auto charting, and here, unfortunately, I missed the lows from this swing test from months ago. So price had started moving up off this support, but there was a couple of back tests from this previous price action, and the supply and demand zones started painting on here, and we got a nice overlap. So then I think it was around the 30th of June, I finally got around to putting in an order with my supplier, and I saw price dip down here, hit this 3-day weekly level. It's also above the previous weekly open. It's also above this supply and demand box. So I thought to myself, I'm not going to get a much better price, and I ordered it that day. I think it was on a Friday. And then the following week, you zoom in, over the past week, heating oil has gone up from 2.5 to around 2.65. So that's an increase in the last week of 5%. So that's not bad. I saved 5% on my entire winter heating oil for next year using auto charting on an asset I knew absolutely nothing about. So this week, I'm proud to have a guest trader on the show provide some analysis on how he uses the auto charting tools. Now, the guest is Stuart, who is a professional trader and coach in the MDX TrendMaster community. And Stu has been trading for a number of years in crypto and developed some highly successful strategies using Fibonacci's and auto charting and a number of other techniques. So I'll let him roll the clip and you see what you think.
There's a few things that I really like about the MDX TrendMaster Auto Charting tools. One is just using these signals to really help clarify which way the market is trending. For example, here you can see it's a very obvious downtrend, a series of lower lows, lower highs, etc. And also it just helps to provide some nice invalidations as well, right? It can kind of keep the guessing game out of picking your stop loss and that sort of stuff. basically giving you these invalidation levels here, for example. Here this is basically where our downtrend had bottomed for now. You can see that we just set series of lower low, lower low, lower high. So basically, if you're looking to play the trend, rather than getting wrecked by FOMOing in at the bottom, what you're more so looking for is a bounce back towards that, that lower high level, right? And that's actually mapped out by the indicator, just making it a little more obvious. And so basically, rather than FOMOing into a short down here, I'm looking more so at the price getting back up towards these levels before taking that approach, right? And I mean, this would have been a perfect example. You could have got into a short somewhere in these levels here, could have played the top there. Obviously, it did reverse here. You can probably see, actually, I'm really going to zoom in here. So basically, if you were playing this, a lot of you guys, for those of you who do follow me, I love playing Fibonacci's, which is another reason why I like this. And what I'm going to show you here is these points can also be used to pull Fibonacci's, right? So just looking at this type of a setup, as I was talking about, getting closer to this level here, pulling a Fibonacci from this pivotal point down to our next pivotal point. And you guys know that I generally like to start looking for reasons to take my positions at the 786, 886. So just looking at this, however you may have played it, just basically looking for getting closer to that lower high structure, right? And I mean, we can zoom in here a little bit more and you can see that we would have basically had this little downtrend here. You can see this is basically where we lost our uptrend as far as looking for reasons once we start getting to that 786, 886 level. You can see that this is where we end up losing structure. And as well, it's just we never did break this lower high structure as well, right? So, and then this, of course, was invalidated when we got this low, lower low, lower low, lower low, lower low. We break this level. Then you can see that we get a higher low print there. And just to kind of show you how what I mean by pulling fibs, it's hard to say if this signal would have been here on time or not, because it's just a lagging indicator, right? And I'm not sure exactly what the parameters are for it to print, but if it would have been printed there, I mean, you take your Fibonacci there and look at that, just pulls right back into that 786, 886 fib pocket. It's obviously not going to happen every time, but basically just using these signals to play the trend kind of a thing. Even when looking at reversing against the trend, you can see using a Fibonacci, for example, after this higher high printed, looking at that, boom, right to the 786 and then rejection. So again, hard to say if that would have been printed at the time or not. Even right now, we get that lower low signal. And if you pull the Fibonacci from that to where it's currently topped out, you can see we're basically finding support in the 786, 886 fib pocket. So it's a little riskier when you're doing it like so, because obviously you're playing against the trend, but it is what it is. Basically all I'm getting at with that is just that these levels can be used to help give a little confidence and confluence in pulling your Fibonacci's kind of a thing.
So that was StuTube Trading showing some of his powerful strategies, which I've seen him time and time again make some really nice gains and also protect his downside when trades have gone against him and preserve that capital. I'm going to put Stu's YouTube channel below, so definitely check out that link and go and have a look at some of Stu's videos, because even I've learned a lot, particularly on his Fibonacci techniques and several other really great strategies Stu's developed. So thanks a lot, Stu. See you again on the show soon. So that's a wrap from me and Archie here on part 1. Now in part 2 of auto charting tools, I'm going to share 4 more features, including the auto plotted trend lines, the Fibonacci retracement tool, the candle identifier, which scans and auto plots different candle types, and the daily, weekly, and monthly pivots in the bottom right here. So yeah, if you'd like to see the rest of the auto charting tools, then hit the subscribe button to see the next episode. And also, if you've got any questions, then ask away in the comments on anything from this week or things you'd like to see next week. Otherwise, I hope you've gotten value out of this video. And this week, I'll leave Archie to play us out.